Hola guys, ¿qué pasó? What's going on? This is Hala Pablo, and I hope everyone had a good weekend. Let's talk about gains. So yeah, yesterday, Bitcoin, we had a little bit of a downsize with Bitcoin, which was like totally expected. Anyone who's been following my charts, my TA, and these videos, certainly people in my trading group knew what to expect. And so yeah, everything is just falling in place. And as to be expected with the series of rising wedges and the predominance of supply and the volume spread analysis reads, it's really a no-brainer. And I believe there's going to be further bloodshed with Bitcoin. So yeah, if you're tempted to jump in and thinking that it's going to go back up to 18,000, 19, 20,000, whatever. Just be careful. You could very well be buying into a bull trap or a UTAD, and I believe that there's more prior resistance lines, support lines to be tested as we make our way down back into the 16,000 area, 16, 15,000 area, according to the Fibonacci retracements. But I don't really want to talk about Bitcoin right now. I've done like several videos on Bitcoin and on Ethereum. Let's do something. Let's talk about some real gains. That's because that's money, and that's what we're all about. We're here to make money. We're here to trade, whether up or down, short, long, bear, bull. We're here to make money, and that's what I'm all about. And so I thought I'd go through some charts with some recent gains that we've made with the group. We've accumulated based on charts, recent charts, and I have a few here. I'm not going to do the cumulative percentages on all of these, but just to give you an idea of how you can make money in a counter trend, in a bear market, even if you live in an area like I live in. I live in Texas and United States, and we can't short crypto here. You just can't short or leverage trade crypto. Just that option is not available to us. So, but we can still make money going long in a counter trend. You just have to know a little bit about pattern recognition and VSA and Wyckoff, and you can reasonably guesstimate where the price is going to go, and you could set your limit cells like I do, like I teach with the Fibonacci extensions. And for those living in Europe and other places, or who trade with a VPN and who are able to short and leverage trade crypto, you could also, of course, make money, obviously, in the shorts if that's something that you're able to do. And I also provide technical analysis that's 80 to 85% on the money with those as well. And I have a few on here that I'll show you where we've made some home run shorting as well. But let's start with Rose. Rose, of course, is on Coinbase, and so this was the chart. This was the initial chart. On all of these, I'm going to show you the initial chart that I uploaded to TradingView after I gave the preliminaries to those in my trading group. So here with Rose pennant, we saw that it was forming a nice bullish pennant here, and I marked the you see the gold here on the Fibonacci extension level, the 1.618. That's usually anywhere between the 1.618 and the 2 Fibonacci extension is where I recommend setting your limit cells when you do these. These are, of course, momentum plays. You want to get out. You don't want to linger in these once they mark up, or in this case, reaccumulate. You want to get the hell out fast because these come down. I mean, it's just like they say, steps up, elevator down. Man, it's like it's like crawling up and like freight train down with these. So you want to get out or you're going to lose all your gains. So anyway, if you'd gotten in, I had the preliminary set at 0.08 cents. To be more specific, 0.847. And if you'd gotten in on this one, it marked right up. You see, it hit the 1.618. It even wicked to the 2 fib, and then it came right back down. So I guess that's about 13. That was about a 13% gain if you'd taken profit at the 1.618. Like I said, you don't want to F around. You want to get out of these. So I recommend setting, if you do these, setting limit sells. So when I release the preliminaries, that's what I do. I set a limit sell, and then I just forget about it. And I usually and sometimes I wake up and I say, I've been cashed out of the casino. It's easy money, guys. Easy money. You just got to know where to place your bets. So that's Rose Pennant, and then Algo. I think was Algo a short? I don't remember. Yeah. This was one I released to my group. Of course, I couldn't trade this without a VPN, but it was in a rising wedge. Rising wedges are uh, obvious bearish continuation patterns. So I had this one there. I identified it, set the fib. On the downside, now these are retracements, and I recommended getting out at 1.618. And it took a few days, but it did. And here you see it consolidating between the 2 and the 618 fib retracement before it kind of just shot up in like a bull trap and then came back down to like maybe that's like the 2.272. Anyway, this was another one where it was successfully identified and it was a winning trade. So that's Algo, and then Matic. Yeah, I had one on Matic. I remember that. These are all recent too. Some of these we're still waiting on. Matic. Yeah. Ethereum, Algorand, Matic, Polygon. Yeah, here's one. Here's one that accumulated. It was a falling wedge, and falling wedges are bullish. So rising wedges are bearish, falling wedges are bullish, and boom, shot right up. This was the chart, and then like a day later, it shot up. I don't know about if it was a day later. Actually, it was a lot more than a day later, but it did eventually reaccumulate, and it peaked out at just at the 1.618, almost precisely. You see that right here? The fibs don't fib. Like I tell everyone, the fibs don't fib. So that was a nice one. That was some good gains there. Maker. Here's another one I released. I said Maker made it onto my radar by completing the cup and handle with a successful neckline test. Now it looks like it may be eyeing the next liquidity void mitigation at the 1.618. Let's see if it made it. And so I released this chart, and again, the 1.618 is the gold, and it went above and beyond. It actually wicked the 2.272 fib extension. So this was definitely a good one. You'd have made a lot of money on this if you know, depending on how you, I don't know, it just depends on how much you put in on your preliminary, but it definitely did mark up very, very well, and you would have made a healthy profit. So what was that, Maker? And then we have another one, the E-Gold, retesting range resistance. Here's another one. This is a typical Wyckoff schematic analysis for me. Hit your buying climax, your automatic rally, came back up to trading range resistance. It retested it, came back down for this spring or this terminal shakeout. And that's usually an indication that this sucker's ready to pump. We had before, throughout from the buying climax through to the automatic rally and secondary tests, we had volume spikes and demand, and then we had a steady rising demand predominance in the vertical bar volume. And so I said, you know what, it's time. Let's go ahead and put the chart out. And what did it do? Yeah, well, it kind of screwed around here a little bit, but in the waves, it increased, and then we had a wick here between the 1.618 and the 2. Now remember, if you put limit sells on the 1.618, you're getting cashed out. And this would have taken you out right at the top here. So there's a method to my madness here. And let's see, is there another one? IOTX. Yeah, here's IOTX. This one was a good one. So here I had this regression trend, and I used the Weiss wave on here as well as far as the volume indicators, and I saw prolonged accumulation. I wrote, if bullish sentiment remains, we can anticipate a healthy markup. It seems bent on doing its own thing regardless of where BTC is going. And so I forgot what clued me in that this was bullish. It just had evidence of reaccumulation, or rather accumulation. And I went ahead and put the chart out, and here it is right here. This was the spike that I'm talking about here. Now, you would have gotten out at the 1.618. It had a lot more range to go, but it's always better to be safe than sorry. And I'll take a 10% gain over losing everything any day of the week. So the whole thing is crypto trading, this sort of momentum play. Momentum plays are just it's a numbers game. You do enough of these, and you just set your limit sales between the 1,272 and the 618. If the 618 seems a little bit risky for you, just go ahead and do it right below it. Do it somewhere between the 1.272 and the 1.618 retracement or extension, and that's usually a real safe thing. You get cashed out, and you don't have to worry about getting liquidated. So is there another one? Yeah, YFI or YF2 reaccumulation. This one obviously was a killer. And so I saw clear absorption reaccumulation, and boom, you'll see that. Yeah, this one obviously totally exploded on it. So yeah, if you'd gotten in this, yeah, this would have gotten you out obviously at the 618, and that would have been painful. But you could always jump in at these, all of these reaccumulation points you can get in. You just have to, reanalyze the, the Wyckoff and the Elliott waves, and if things jibe, you just jump back in. You could just scale back in. So anyway, that's just a few of them. 1, 2, 3, 4, 5, 6, 7. That's 7 wins out of, like, I think I posted like 10 or 11 charts at the time. 2 of them went bust, and another one I think we're still waiting on. So yeah, there's money to be made, guys. All right, I'm gonna go. I gotta go, but I hope this was a little bit encouraging for you. And I'll have more detailed analysis later on as the week goes on. I'll upload some more videos as I get time, but let this one, go back and look it over if you like. This is all about pattern recognition. I keep preaching it, pattern recognition. That's the same way I'm predicting these Bitcoin distributions, pattern recognition. And if you just have to have a rudimentary knowledge of pattern recognition, sometimes it's good to just get away from the indicators and just look at price action, look at volume and price action. Get away from your Bollinger Bands, get away from your moving indexes, your moving averages. And not to knock people who use those. Sometimes you just got to get out of the macro and get into the micro, because very often the micro dictates what happens in the macro midterm. So as above, so below. What happens on the inside manifests eventually on the outside. So of course you have to have a forensic overall balance of it all, and that's why I look at candles on all the different time frames. But what trumps everything, if you ask me, in my humble opinion, is just pure volume spread, volume price action spread, volume spread analysis with a healthy understanding of pattern recognition. Certain patterns are so reliable, like rising wedges, for example. And there's rising wedges everywhere right now. So many alts are in rising wedges. Bitcoin was in a rising wedge. Bitcoin's still in a rising wedge. Learn these techniques. Hopefully my videos will teach you these things. So I don't edit these. I know I'm very rough and I like to ramble, but hopefully if you're serious about crypto trading, serious about making money, serious about learning technical analysis without spending a bunch of money and getting ripped off by all these scam courses and everything, everything is free with me. So hopefully you get something out of it. Let me know. Give me a like if you do. If you don't, tell me to go fuck myself. I don't care either. But hopefully you're getting something out of this, and I'd love to hear from you if you do. So, all right, guys, I'm going to go for real now. You take care now, and adios. We'll see you soon. Bye-bye.